Welcome. I'm Mark Kerrigan. I'm the author of the best-selling book on Bitcoin, The Bitcoin Tutor. Since 2014, I've helped thousands of people around the world get involved in and profit from cryptocurrencies like Bitcoin. And most importantly, I help students keep their investments safe. So today we're going to talk about the different types of cryptos or cryptocurrencies. Now, when I start with my students, I always start them with Bitcoin because that's the fundamental starting point for all of the currencies that have come after. And you may hear about these currencies called digital currencies or virtual currencies or cryptographic currencies. And that's where the term comes from when we call them cryptos. Because cryptos are based, or cryptos refer to cryptography. And cryptography are those secret codes that are considered unbreakable that organizations like intelligence organizations and spy organizations and even businesses and other companies use to communicate and to secure important information. These currencies use cryptography to secure the value of the coins or the value of the money, and also to secure the ledger so that all the information is, cannot be changed on the public ledger, and also for transactions between people. So all of that is related, and there are different forms of cryptography that are used in Bitcoin and in other cryptocurrencies. But today I want to talk about cryptocurrencies being more than just currencies. In fact, there's many today that don't even fit the definition of currency. So from this point on, let's just call them cryptos. And cryptos will just be our general term for the different types of these cryptocurrencies. Now again, it's built on cryptography, which is the mathematics and science of keeping secrets. But there are different characteristics for cryptos. And in fact, I'm going to talk about 6 different ways that cryptos really can be considered or used. And for a lot of people today, realizing that how they can be taxed and regulated. So let's start with just listing the 6 that I'm going to go through. So today I'm going to talk about cryptos in terms of currency, commodity, as a security, meaning like a stock or a bond, as a protocol, as a payment network, and finally as a funding source. So let's take each of those. And we'll start with the one that really was the idea behind Bitcoin, and that is being a currency. You see, with a currency, as you know, you can buy and sell things. You can do that, with dollars and euros. You can do that with paper currency, or you can do that with digital currency today. But you have to do that through a central party. Right? You have to use a credit card, you have to use a check. All of these have to go to some sort of trusted central party, and usually they involve your bank. Now, the primary currencies in this space, at least initially, were Bitcoin, Litecoin, and then there were some privacy coins that are just getting going now, like Zcash and Monero and Dash. These are examples of coins or cryptos that really have the purpose, at least initially, of a currency. Now, I'm going to talk about Bitcoin a little bit more detail in a moment because Bitcoin is sort of falling out of that idea of being a currency. So again, a currency would be that you can buy and sell things, and ideally with a merchant who would accept it, of course. But of course, you can still buy and sell person to person, because one of the big advantages of cryptocurrencies is that there is no centralized place that needs to approve a transaction. I mean, I travel a lot, and it's incredible how many times I have transactions held up just because, frankly, banks are afraid of the really poor technology behind credit cards. And I'll touch upon that more in a moment. So that's currency. Currency is well understood. You can buy and sell things with it. Now, as a commodity, which is the second category, this is more like a precious metal, like gold, silver, or it could be oil. But basically, there's some intrinsic value that people agree upon. And again, I'm not going to go into the very depths about what creates intrinsic value. But basically, if we all think it has value, and it has value for, or it has had value for many generations through many different countries, through many different times in life, times in the world. I mean, if you think about gold, gold has had value for over 5,000 years. So this is long before most of the countries we know about today. Now, What's interesting is Bitcoin is shifting from this idea of a currency to a commodity. So Bitcoin is going to be seen more and more like a commodity going forward, which is for a number of reasons. One, Bitcoin is really not scaling to the point where it could be used as a serious currency. In fact, some people estimate that no more than about 7 transactions can be done per second in the Bitcoin network. Well, that simply won't do. And honestly, it could take up to 10 minutes to get a first confirmation, or as a lot of people have heard lately, it could take hours until your transaction is confirmed because of the amount of volume in the network. It's not keeping up. So I don't know about you, but going to Starbucks, I'm pretty sure my coffee would be getting cold by the time I bought with Bitcoin. But Bitcoin is seen by Wall Street and by other folks who are just sort of tiptoeing into cryptos as the big, as the big currency, as the gold of cryptos. So I think Bitcoin will continue as a store of value and probably continue in its growth trajectory as well. A third way to look at this is as a security, and that's a term that Wall Street uses to talk about stocks and bonds. And the reason it's like that is I really see that it's traded a lot like stocks. People might also say it's traded a lot like foreign currency, the Forex, which is very similar as well. I'm sure you've seen by now lots of folks on the internet. In fact, most of the crypto videos on the internet today are by active traders using what they call TA. And TA is just a little abbreviation for technical analysis. And these are patterns that have been established over the course of years and decades that basically help traders understand when's a good time to buy, to sell, and to hold a security. Again, whether it's a stock, whether it's a bond, or in this case, whether it's a crypto. So some of these cryptos can actually have multiple personalities. So a lot of the currency ones like Litecoin and Bitcoin can also be one of these security traded like stocks, right? Where people are trading that and trying to cash in on the ups and downs of the currency. Now let's look at another idea. Cryptos are also a bit like a protocol, and that's a technical term for what are those underlying components of the internet. And so a protocol might be like the internet itself, what's called IP, Internet Protocol. There's also TCP, that's another one. There's SMTP, which is how mail moves around on the email moves around on the internet. So there's a lot of different protocols that are sort of form the basis layers for this. Well, we're starting to see protocols like that being brought forward by Ethereum as the basis for this new layer that we're calling smart contracts. And I call this money with a purpose. So instead of doing national money that's $1 or euro or pound, now we can move to using money based on purpose. The right money for the right task. And this is a whole new way of thinking about it, and I won't go into a lot of detail today, but really it's a different way of thinking. Another possibility with these smart contracts right now is really looking to impact the legal system by taking some of the basic contract law and putting it into basically a smart contract. You program in the agreement, and then you don't have to go to court. The agreement is all handled online. And once the parties do what they have agreed to do, then the money can transfer. Insurance is another example of a type of contract that we all get into that can also be easily encoded into smart contracts. So expect to see a lot of changes, not just in money, but in insurance, in legal with these contracts, and really based on these new protocols, Ethereum being the major one. It can also be a payment network. This is our fifth way of looking at cryptos. So a payment network really is, what you use every time you use your Visa, MasterCard, American Express, any of those plastic cards. And I think PayPal was hoping to be the next generation of payment network, but unfortunately it did fall short. And maybe that is fortunate because really it's opened up the opportunity for cryptos to come in and fill that gap that PayPal was never able to really do. And even PayPal has a central authority, and that's also a risk. But if you go back just one step and we look at Visa and MasterCard, these are central authorities with high costs. In fact, over 3% average for the use of Visa and MasterCard throughout the entire system. That means for every $100 that transfers in the system, $3 goes to Wall Street, which is an incredible percentage given how much transaction volume is done on Visa and MasterCard. Finally, I would say that this sixth category of a funding source is another way or another personality, a persona of a crypto. And a great example with this is the ICOs that you're hearing about today, these initial coin offerings. Now, in the Wall Street world and certainly in the tech world for many, many years when there was the big dot-com boom in Silicon Valley, people were always talking about IPOs, and that was short for initial public offerings. This is when a company went public. They went from a private company to a public company. Now, in a lot of ways, this is what these ICOs are trying to do. But if you want to take a look at the IPOs were usually only available to what they call qualified investors or to big companies, investment companies, venture capitalists. So they took a bigger risk, they did more research, but the returns opportunities were staggering. Many of these IPOs could make 100 times their original investment. And we're starting to see that with some of the ICOs. But again, this is an area that's very new and one that I recommend that everyone take very carefully because there's no guarantees about an ICO. In fact, an ICO could easily go to zero no matter what you've invested. So those are the 6 personalities or personas that cryptos seem to have today. And I think over time, what we're going to see is some aggregation into these different categories, or at least some of those categories. We'll start looking at some cryptos as an investment vehicle for funding. We'll see some used as a currency. We'll see several that are used as different types of protocols. Again, Ethereum being the leader in that space. Like Bitcoin is going to be considered probably more of a commodity, where it's a way to park some money like you would in gold. Now, I have a few final things to share with you today. Many of you may know that the U.S., as much as it's a leader in technology, in the finance world, what we call fintech, it's pretty embarrassing. In fact, the idea of the chip credit card was a long time coming. And in fact, it's been in Europe for many, many years, and it just came to the U.S. in the last year or two. Also, the U.S. trying to transfer money from person to person, I guess people are just really patient in the U.S., but it takes a long time. If you're writing a check, someone can deposit that and then they have the money the next day. But if you're trying to do digital transfer and ACH, that can take anywhere between 1 day and 5 days to transfer money between accounts or between people. Even wire transfers can take from several hours to even 24 or more. And they can cost $40 to $50 to send and even some money to receive. So this is an issue in the US today. And I have to say that these different faces of cryptos have not gone unnoticed. In fact, I say that the governments now that we're coming into tax season for many countries, they're all trying to get their fair share, as they say, right, of our gains here in this market. So what I've noticed is that governments will consider it a currency when it suits them. An example is they'll apply money exchanging laws to exchanges. In other words, there are a certain set of laws that if you're going to buy and sell something with dollars, that you have to conform to. So they've used those laws to regulate exchanges like Coinbase. Then the government considers it property when it comes time to tax. Because why? Well, they make a lot more money if it's considered property, and property is the same rules that get applied typically to stocks and bonds, the idea of capital gains, or when you buy or sell a house, the value that you make based on what you bought it for and what you sold it for and the difference in between. It's also a commodity by the government. In fact, the CFTC in the US is starting to look at how to regulate it as a commodity. And the next organization here, at least in the US, that's likely to come on board is the SEC, the Security and Exchange Commission. They're likely to come on board soon because of the concern about some of the fraudulent activities happening with ICOs. And in fact, many ICOs are not even available to US citizens right now because of the fear and concern about retaliation, basically, by selling these ICOs to US residents and citizens. So there's a lay of the land It's a good place to start when we're going to be talking about cryptos more and more in the weeks and months ahead. So remember, cryptos aren't just one thing. They're really a whole new technology that can provide a lot of capabilities from currency, commodities, payment networks, funding sources, and these basis protocols for things like smart contracts. You know, there's so much potential. And what I'd advise you today is, I know there's a lot of turbulence in the market with things going up and down, prices going up and down. Here's my belief. The good cryptos, the ones with purpose and managed by a great team, will likely not just survive, but they're going to thrive in the months and years ahead. Thanks for joining me for this video. I'm Mark Kerrigan, founder of the Bitcoin Tutor. Remember to keep learning about Bitcoin and cryptos and profit from the knowledge.